You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, at least we think so, Options Insider Radio Network. Glad to see so many of you are embarked on this brave new journey with us to the world of Options Insider Plus, Options Insider Pro. We're still in that launch window, still ramping up all this cool stuff. It's going to get even cooler as the days and weeks and months go on. All kinds of cool stuff. If you like stuff in your ear holes right away, you like to hang out in the live and ask questions, all that fun stuff, then definitely the Plus is for you. If you like to go beyond that, you want to get hardcore, you want to get pro, you like the pro Q&As, you like the options oddities at the end of the week, and who knows what else is going to come on that, then the Pro is for you. Also, those folks every month get that drawing to win that cool Options Insider trading crate full of all sorts of cool, fun stuff, of which we are still compiling and building all these cool things. A lot of cool things in the offing and a whole bunch more. You know where to go to find out more. theoptionsinsider.com/plus or /pro will get you there. /shop will get you to the overview of everything. And you can find out for yourself what's cooking. If you like this hanging out on the podcast, listening at your leisure, all of that is all still there, all still hitting you multiple times a day out there as well. So however you like to get your content, we've got something out there for you. Glad to see so many of you are enjoying it. Let's see who we're hearing from on the old program today. We're going once again to the FTSE Russell studios, where I am joined once again by Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program. I'm glad you could break away from your busy activities going on, because there's a little thing called recon I know looming in the future that's keeping you pretty active, sir.
Mark, thanks for having me back on the show. It's always good to be here. Yeah, we're getting busy. We're ramping up. This is Recon Month, and lots of exciting things happen in the reconstitution of the Russell indexes here in the United States. So we couldn't be more excited. There's some great news. We're going to actually have a guest with us next week on the show, who you know extremely well, Catherine Yoshimoto, and we're going to get into the weeds of Recon next week. But June 4th, we came out with our first edition and deletions last Friday. So there's a press release on our website, which I'll go into details at the end of the show like I always do. We've got webinars coming. I'll talk about those some more, but we're doing one with our partner and your partner, CME Group, with another one of our partners, SIBO Global, on mitigating risk around recon with derivatives. Our favorite word, Mark, derivatives, and how to trade derivatives around recon. CME's launched some new products. The FTSE 100 adjusted rate total return future, adjusted interest rate total return future. So that's based on the FTSE 100 index. So we're very excited to see that, and looking forward to a great show today.
I am looking forward to a great show as well. So let's kick it off the way we are wont to do. It is time for the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. You know what time it is. Time to see what was moving and shaking across the broad spectrum of products that they trade at CME. It's quite a few. Sean, you know what comes next. Where should we begin our journey this week, sir? To the light side or to the dark side? We'll give you a hint. One is a little bit more pronounced than the other this week.
I'm going dark side. I know I'm a light side guy, but I'm going dark side today.
Interesting week to mix it up, sir, on a week where it's about 90% light side. You go.
I know.
You go.
And I'll tell you why, because you know how we joke about the fence watch. I think I've noticed my fence watch indicator, that being lumber, has been breathing. So I'm just I'm excited about the dark side of some things today.
Well, let's get into it. You might have a little bit more money in your pocket when you build that fence. Let's get to the dark side, listeners. We could barely scrape together a bottom five, even though that bottom one, as Sean alluded to, is pretty darn impressive. Let's get there. Number 5, Palladium, off 1.9% this week. Number 4, another rough week for rough rice. It doesn't get old, that pun. I could do it week after week. Off 3.2%. Number 3, it's feeder cattle. Another rough week for them. Off almost 3.5%. If you're curious, a little bit of a longer memory, you go back to all the way to last week. You remember it's number 1 in the other direction last week, up 11, almost 11.25%. So interesting couple of weeks for feeder cattle. It giveth and it taketh away. Number 2, it's Bitcoin, off a comparatively small 3.91%. That ain't a heck of a lot for Bitcoin. It can do that in a few minutes out there. It was number 8 in the same direction last week, if you want to go beyond the bottom 5, all the way down to a rounding error of about almost down about 1% last week, 0.9%, which again, you can do that in a blink of an eye in Bitcoin. To the light side, lot of light side. In fact, it shows you how light side heavy it is this week, Sean, when your beloved E-mini Russell 2000 got 1.5% almost this week, and it's all the way down at number 17. That's how much green is on the screen this week, Sean.
It's a light side. It's there's a lot there.
A good week to go dark, sir. Let's go to number 5, the actual top 5 here. Ags dominating the top 5 this week, listeners. They're back in action. KC Wheat, number 5, 2.64%. Number 4, it's the Lone Energy. I thought more energy would be in the top 5 this week, but no, Nat Gas, the Lone Energy, up 3.81%. It was number 3 in the same direction last week, up 3.25%. By the way, if you're wondering, WTI is well below. It's below the Mexican peso. It's only at up 1.96% this week, which is a good week, but on a week when everything's getting a nice lift, not so much. Number 3, soybean oil. Again, back to the ags. It was number 2 in the same direction last week, up over 5, about 5.12%. And then more ags. Number 2, oats, up 4.25%. It was number 4 in the same direction last week, up a little over 3%. And number 1 with the bullet this week, corn, up 6, almost 6.75% this week. So a good run for corn. I can hear all the corn folks just champing at the bit out there, yelling corn, corn, corn. But before we get to that, Sean, your beloved lumber, number 1 to the dark side, off 13.06% this week. So dare I say it, how goes Fence Watch? Have you finally pulled the trigger, sir?
I pulled the trigger.
Really? So are they building a fence around the studios as we speak?
No, the supplies, there's still a lead time to even get the material. So we won't have a fence here until probably closer to the beginning of August. But,
really? That long of a lag time for dead trees these days. Impressive.
It's incredible. But yeah, there's definitely a lumber shortage.
There we go. Well, you know what else is incredible? It's all this green on the screen in ags. So let's get to it.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, let's do it. I know we got a lot of ag heads out there who are always writing in saying, do more ags, do more ags. Corn does more paper than all these other things. I get it. So you're getting your taste of it today on the show. Listen, let's kick it off with the big dog out there, corn. Pretty big this week. Like I said, it's up nearly 7% and lighting up the tape this week. 603,000 contracts on the tape out there in corn. That's why I've said before, if you're looking for products, once you get your feet wet, maybe in the equities or something like that you're more familiar with, you want to start branching out into other products. WTI is a good one because, of course, has a little bit of vol, but also has a skew that is reminiscent of the equities, so you won't feel too out of place in that one. And then, of course, you have the ags. The skew is different, but you're talking volume and liquidity for days and some volatility out here. So if you want a product where you can actually get some stuff done, you could do worse than looking at corn as well. Coming into today's show, we got that front future just a tick under 700, 698.75. It's up about 2.33% just this week. Obviously had a nice lift since our last show last week as well, because it's up nearly 7% since our last show. Of that 600,000 contracts on the tape right now, 31% coming in the July contract that has about 15 days to go. So right beyond our frame of reference out there. If you're wondering what is the vol out here in the July corn contract, it's a 43. So you're talking some hefty volatility out here, up nearly 3 points this week. So everyone's talking about equity vol kind of languishing. VIX is well below 20, as is NASDAQ vol and just about everything else. Even small caps are threatening to get there. But corn vol over 2x that, coming at a 43 right now. So if you're looking for a little bit of juice, again, it's liquidity, there's volume, and there's some volatility. 3 things options traders tend to like. Let's get on out to the skew here in the July contract. Last week, 7.4% cheap were the puts this week, 3.4% cheap, so getting cut about in half. The calls last week, 12.1% rich, so a pronounced bid to the calls last week. This week, 3.3% rich. So interesting. We got a little bit of a bias to the upside, which again, the skew is going to be different if you're coming from equities trading in the ag. So get a little bit acclimated to that. Things like covered call is going to perform a little bit differently out here. But hey, if you're a big covered call trader, you like a little bit of bid to your calls, you could do worse than looking here in the ags. They were 12.1% rich last week, a little bit less this week. In terms of the hot trades, the big action, like I said, we're flirting with that 700 strike. So you probably got to figure it's going to be something on the 700 strike, and that was pretty much the case this week. 700 calls in July, dominating the tape out here, listeners, doing an impressive nearly 16,000 contracts, about 6,200 on Monday, almost 5,000 on Tuesday, about 4,500 yesterday. Weirdly enough, no paper going up today, 0 contracts today. So maybe a little bit of hiccup with the data, or maybe it's just a quiet day right now out there on the July 700s. I would think at least a one lot would go up, but weirder things have happened out there. Followed by number 2 out here. We actually have to go. That's not optimistic enough for you, listeners. Number 2, just barely squeaking it out, is actually going out to Dees. It's the Dees 800s with just a little over 11,000 going up here today. Again, no paper on these today, but about 4,800 on Monday, 3,000 almost on Tuesday, 3,300 on Wednesday. A whopping goose egg going up today. There is some paper going up here in the 600s and 620. So there are prints coming through today. It's not everything is not zero. It's just strange that these strikes that had so much action earlier in the week, not even doing a one lot right now. 750s out here in March of next year, also pretty active. They're at about a number 3 with about 10,500. Again, about almost 6,000 on Monday, 2,800 on Tuesday, almost 2,000 yesterday, and a goose egg today. So it could be there's a hiccup with some of the data coming through for today's session. I'll have to look in and check. But either way, the number one strikes and hot options out here are still going to be pretty much the same. Let's go out a little bit farther to see if we can see any other interesting and or aberrant prints. I think the 800s kind of have it in terms of the DEIS being the most optimistic strike that we're seeing out there from an overall corn perspective. Again, corn's a fascinating product, obviously trades around that harvesting and planting cycle. So you see aggregations of liquidity a little bit nearer term and a little bit farther out, which again gives you a little bit of life longer term in the options life cycle as well. But again, a lot of paper going up this week and interesting stuff afoot and a lot of vol. You could do worse than hanging your hat out here in all things corn this week. And, you know, we talked about oats before. It doesn't really do a lot of paper. It is number 2, but we can't really sink our teeth into that. Since we're hanging out in ags, I know our ag heads love it so much. Let's take a quick sojourn really quickly into another product that is lighting up our tape this week. It is number 3 to the upside in our movers and shakers. It's soybean oil, a little bit less active, still active. It's more than a fluid milk or even a platinum or a silver. It's doing 63,000 contracts right now. It's about a tenth of what we saw going up in corn. That is soybean oil. You had about a 70 even almost exactly on that front contract that has about 15 days to go in July. Also, almost half of the paper. So about 46% of that 63,000 contracts came in that July contract. Vol out here about 37 and a quarter. So pretty frothy out here from a vol perspective. Again, it's kind of hard to argue against that. We've seen ags whipping and moving all over the place, rallying hard a few weeks ago, coming off a week or two after that, and rallying hard again this week. So it's hard to argue that vol isn't merited out here. Let's see here. Skew-wise in that July contract, we are looking at, by the way, the vol kind of unched this week, listeners, about 37 and a quarter, off about a tenth of a point. The skew last week puts nearly 3% rich this week. 1.3% cheap, so puts coming in pretty markedly. Calls last week, listeners, get this. Calls were 34.1% rich last week. My goodness, that might be the most pronounced skew I've seen since we started doing this show. This week, 3%. Again, this is the contract that has a few weeks to go, so it's a weekly, but wow, that's a lot of bid to the calls. I need to dig in and see what was going on there. Most active contract this week, listeners, 75 calls going up a whopping 3,400 times. Again, this is a little bit lighter contract here. Most of that coming on Monday, 2,100, 500 on Tuesday, 700 on Wednesday. Again, no prints going up today, which is a little strange. Yeah, it looks like there's a mostly opening on Monday and on Wednesday, a little bit of closing on Tuesday. So maybe some folks coming in and crushing those 75. Something had to take that vol all the way down from a 34% premium to now about 3% in the span of a week. So I'm guessing those 75s. 77s also pretty active, 2,000 of those this week. Again, Monday, the big day, 1,600. Most of that opening. So it could have been a 75, 77 vertical. I don't think that would be enough to take them to skew down that much. Maybe selling a strip of both of those. Either way, something came in and just annihilated that skew to the upside, listeners. That's an impressive degree of annihilation. Also worth noting, right behind it, the 65s out here in DEIS, also pretty active with about 3,400, just a tick under it, 3,370. So they're actually the number 2 contract, and they did most of that paper on Tuesday, about 2,700 of that 3,400 or so coming on Tuesday, 700 on Monday, a whopping 2 lot yesterday, and again, 0 today. So interesting paper going up today. Of that paper on Tuesday, most of that was closing. Let's look at the skew really quickly out here in DEIS to see how that changed. The calls, 6.7% rich last week, 5.1% rich this week. So the calls, nowhere near the drubbing in the calls that we saw in July here in DEIS. I need to take another look at later after the show. That's a lot of juice to come off that call wing in a very short period of time. Perhaps it is merited. Perhaps we're getting some weird prints on this. Either way, fascinating stuff afoot here in the ags. We can probably talk more ags for the rest of the show, but we got to keep on rolling. Talk the other side of volatility, listeners. Yes, it is time to talk some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's get to it. Let's look at a little bit of vol and a little bit of equities. You know, and Sean's not busy out there building fences. He is holding down the fort in the land of all things equities, in particular small cap. So let's start there. Small cap vol, like I mentioned, all the vol in the equity space getting squeezed a wee bit these days. For how long, Sean? How long were we talking about? Can RVX break 30? It seemed impossible. It hit 30, would bounce right back off of it, hit 30, bounce right back off it, get up to 32, 34, hang out there for a couple of weeks. Well, it finally did break 30 not too long ago. Now we're threatening the 20 handle. Coming into Showtime, listeners, we're at a 23.35 in RVX, aka the VIX of the Russell 2000. That's off over 2 points, about 2.1 points from where it was this time last week. So even small cap vol can melt, listeners, and it's doing so this week. VIX coming into Showtime at about a 16.25. It's down almost 1.75 points from where it was this time last show. VVIX, aka the vol of vol, at about a 117 coming into the start of the show. That's down nearly 5 points from where it was this time last week. And vol Q, aka the at the money vol of NASDAQ, aka the newest addition to the tradable vol scene. Obviously, CVol is the newest addition to the vol scene over there at CME, but you can't trade those yet. So vol Q, the newest addition to the tradable vol offering over there at CME, at about exactly a 17 coming into Showtime, off a little over 2 points, 2.13 points. Again, I was saying this on the option block earlier. I do believe this is the first time we've seen a 16 handle in vol Q since the products were listed. So interesting stuff out there in the land of NASDAQ vol. That means the large cap to small cap vol spread, aka VIX to RVX, almost exactly 7 points. It's about a half a point tighter than it was this time last show. I think a lot of that coming from RVX continuing to melt down a little bit. The VIX to vol Q, so the S&P 500 to NASDAQ vol spread at a little more than half a point, about closing in on 3/4 of a point. That's about half a point tighter than it was this time last show. So that one continuing to squeeze as those two, not that much daylight between NASDAQ and S&P 500 these days. A lot of similar components going on over there. A lot to kick off. Let's start in the land of small cap, Sean, because I know, like I said, when you're not busy putting together your fence, a lot popping off in the world of small caps. What has been lighting up your tape since our last show, sir?
Well, let's talk about volatility. You know, June is historically a lower volatile month for small caps and indexes in particular, and I should say in trading and volatility in equity indexes in the U.S. And you know, reconstitution is scheduled around the June month because of those reasons of volatility being historically lower and making it easier for investors to transact and adjust their portfolios with the reconstitution of the Russell indexes. So I'm not surprised to see 23.5 volatility, and you know, it's still what, 7-8 points, I think you said, higher than the large cap index VIX. So I'm not surprised. You know, small caps will always this index will always trade a little more volatile than large caps because of its weightings of the various sectors within the Russell 2000 complex. But we're in for a fantastic recon this year. So I think last year, I think our theme was the big getting bigger and the small getting smaller, and that gap between the largest cap market cap stock versus the smallest of the small caps was, you know, just a tremendous number, between trillions of dollars. $1 trillion market cap for a couple of large cap stocks in the Russell 1000 versus $100 million market cap in the smallest stock. Well, those numbers have all gone north of that. I think you're going to be really interested. It's going to be really interesting to see how many $1 trillion market cap there are in stocks there are in the Russell 1000. I think there's 4, and the smallest of the small caps is now, you know, north of 200 million versus the 100 million we saw last year. So all of that in a little bit more details in our press release. And as I mentioned at the beginning of the show, I don't want to take all of Catherine Yoshimoto's thunder from next week. We're going to have just a fantastic show breaking down the gap between large cap and small caps. But the small cap story has just been tremendous this year, and starting with the last quarter of last year as well, just continues to outperform large caps. Small caps are up a total of 18% this year versus 12% in large caps. So you're going to continue, as you see numbers get stronger and stronger in the U.S., you're going to see this U.S. domestic index continue to perform well. With that comes just fantastic places to express that in trading. The massive volume at CME Group is just really exciting to see, averaging over 200,000 contracts a day, well north of 500,000 contracts of open interest. And the growing volumes at CBOE as well, with their new mini Russell option, MRUT, that's has been trading, and just customers just having a fantastic experience trading that product as well. So yeah, we have more news coming. Additional adjustments happen next Friday, actually tomorrow, the 11th, and then again next Friday as well, the 18th. And then our big day for that big volume close is on June 25th, as we know. And then June 28th, when the markets open, the reconstituted indexes will be complete, and there'll be a complete list out on the 28th of the components of those indexes. So yeah, fantastic. June's that great month of the year. We're very excited. FTSE Russell embraces this time every year, and it's just one of those great subjects to talk about for weeks to come.
And maybe it's a good question to discuss with Catherine next week as well, but I'm curious, Sean, for you, compared to this time last year, where there was a certain crowd watching the Russell 2000. I'd imagine it was a lot of the same players you usually deal with. I'm curious if that crowd has evolved this year, because we've seen small caps and Russell 2000 ever since November, ever since the election, when they kind of kicked it into high gear. And certainly in the first quarter of this year, where small caps were kind of as hot as all the meme names out there. They were just tearing it up out there. Have you noticed a bit of a different audience, bit of different crew, different customers, different people paying attention to the Russell 2000 and to Recon this year versus last year, Sean?
Absolutely. There is a much larger I want to call professional trader and also retail traders that have been entering this market. The growth of clients trading the micro futures at CME has just grown exponentially. And again, our friend Tim McCourt couldn't be more excited to see, one, the number of customers trading the product, but two, the fantastic volume going through at CME Group and the Russell Micro Complex. So there's definitely a new client base that is now wanting to trade the Russell Index versus individual names. You know what? We really don't like to comment on individual components of an index, but one of the things that we're finding investors looking at, which are those components that drive an index that people really follow, are the sectors. People are watching, as you hear healthcare doing better, and you hear biotech stocks doing better, and you hear consumer discretionary, you hear customers out there spending money, buying things, and there's being shortages for things, but the orders are coming. Those are all real positive signs for the U.S. economy, which has been the major force behind the Russell 2000's growth. Investors are looking at these indexes because they're tradable, they're liquid, they're more comfortable in notional value, more comfortable in tick size. And the market is really understanding the futures and options markets much more fluently, and it's really exciting to see the growth.
Well, let's check out some of that growth here in the old Russell 2000. For a while now, Sean, that story has also been what's going on with the small calls, what's going on with the small delta calls. Let's see if that's the case this week. Go down to that drop down. By the way, I got so excited, top of the show, I forgot to mention cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Two great places to go to get this data in your hot little hands, listeners. If you go there, go to the drop down, go to Equities, E-mini Russell 2000. That's where we're hanging our hat next here. Coming into showtime at about a 23.17, almost 23.18 out there in the Russell 2000. Again, Sean, our Our Russell 2000 at 2000 party seems like a distant memory now, sir. We missed it.
Yeah, we did. I wonder when the next big number we should probably celebrate. So there's never not a reason to have a celebration around.
I don't know about you, but I think 2318 sounds pretty cool, right? You know, hey, what the 2318?
I'm liking it.
2318 spectacular. What do you think? I like it. I like it out there in small cap. Never an excuse not to celebrate out there to bring the double negatives together here in all things small cap. Let's look here, see what's lighting it up this week. Of the paper out here, about a third of it, again, small caps kind of playing the traditional equity role of all near term all the time. 33% of that paper going up this week in the June contract, and week 2 that has 1 day to go. So there we go. If you're wondering, the vol in these very near dated contracts at about 16 2/3 on that front contract. You go out a week, it's up to about a 17.5. Let's have the temerity to go out all the way, and another third of the paper goes out in about 8 days in June. The challenge of small caps. But a lot of that paper, that means everyone wants small delta calls. Quite literally, small delta calls are trading again this week. 1 day to go, 23 half calls were dominating the tape again this week. This is a strike that's had some fascination for people for a while. It seems like we've been talking 23 halves now for a little bit, and they've been trading pretty actively all week. Most of that going up on Tuesday this week, slightly closing there. So those, just by definition now, we're about 30 odd handles shy of that, and we have about a day to go. So those are by definition very small delta calls right now, and those are leading the dance. So everyone who's asking, were they dominating the tape this week? They pretty much were, and we're pretty active all week, and we are getting some prints today in these. So maybe there was just no action in all things ags out there today. But again, it could be some weird prints afoot as well. Also some action on the 2300 puts in both the contract with 1 day to go and the June contract that has about 8 days to go. Both of them pretty active on that 2300 strike. Again, not surprising. We're threatening it. We bounce off of it. We break through it. We rally back through it again. So the 2300 puts doing pretty decent paper in both months out here as well. I'm looking for some interesting aberrant paper, listeners, that we may not expect. By the way, you get a little bit farther out. You get out, let's say, about 20 days to the week 1 June contract. That has a vol of about 18.6. So a little bit frothier. But again, you can also see all these near-dated contracts. You got to go out all the way to August to find a 20 handle in the vol, listeners, which is another, raises the question, when is RVX going to get back down there? RVX is a VIX, so it's pretty much a 30-day measure of volatility, and a lot of these nearer-dated contracts are shy of the 20 handle right now. So if that's the case, we could even be there by next week. This is a lot of juice coming out of this front portion of the vol curve here in all things Russell 2000. Let's look really quickly. Any other strange, aberrant prints? 2400s also leading the dance out here in week 1 June's. Again, kind of smaller delta. They're about 80 handles out of the money there. That future's a little bit lower. So yeah, that's would also qualify as small delta. So everyone keeps asking about smaller delta calls. They are indeed still trading. And the little bit longer term out of the money puts, a little bit of those as well. 2200 puts going up in July. They have 36 days to go. Those are pretty active as well. Not quite as far out as they used to be. They used to be many, many hundreds of handles out of the money they would go out, and they'd probably go out 3 or 4 months. Now it's about a month and change, and it's only about a little over 100 handles out of the money, but still 2200 puts also active out here. So if you're wondering, some of the old school paper is still going up in Russell 2000. So small delta calls and out of the money puts, just in a little bit different flavor than perhaps they used to trade out here. Sean, we could talk Russell for the rest of the show, but there's other things lighting it up out here. Where should we take our movable TWIFO feast next, sir?
Rates are near and dear to my heart. Let's go to rates.
Rates. All right. We can do that. Rates. Let's go on out to the world of rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, Sean, you chose the rates. So where should we hang our hat next, sir? Should we go a little bit closer in the yield curve? Should we go a little bit farther out? By the way, if you want to play along for yourselves, listeners, go back to that cmegroup.com/TWIFO dropdown. Go out to U.S. rates, and then the sky is your limit. Sean, where should we pick to drop on the yield curve, sir?
Let's go to my former home, the Eurodollar complex.
My favorite product in the world, Mr. Sean. Let's go on out there to all things Eurodollars. Whoever Mr. Russell Rhodes is right now, he's smiling because he always likes to incorporate more rates into the show out here today. There's so many strikes going up here, listeners, in Eurodollars right now that is actually choking my machine to death. Let's see if we can get these Eurodollars pulled up here before the end of the show, listeners out here. While we're doing that, Sean, I know CME, you're looking at some micro treasury contracts out here in all things rates. What's catching your eye out there on the micro front coming from CME, sir?
I just saw an announcement that they're launching micro futures on treasury. So it's another one of the expansions of products reaching that audience that is looking to, or I should say that customer base that is looking to customize that hedge on an institutional basis, and also for a client base that is really interested in trading treasury futures. So a smaller contract is one of those things that have been incredibly successful at most exchanges now as they launch these products at exchanges. CBOE's mini contracts, CME's micros have just absolutely taken off the charts in equities and also in Bitcoin, right? So I am not surprised to hear that there's strong client demand for one in the Treasury complex. So I'm very excited to see that product launch and be incredibly successful at CME Group.
All things small are big, except when it comes to Eurodollars. That's still big, and it still does a lot of paper. So big is big when it comes to Eurodollars. Everything else, micro is the way to go. Maybe we need a micro. You talk about micro treasuries there, Sean. Micro Eurodollar. There we go. That would certainly. But how much more paper can this product possibly do? Right now, coming into showtime, just a tick over 4 million contracts on the tape this week. So it puts corn at 600,000 and the soybean oil at 63,000 and most other products to shame out there. If you're wondering, this is a very evenly spread out contract. The lion's share of the paper this week actually coming in the SEP contract far out there. All the different color codes. I'll have to do a show one day, Sean, just explaining all the different color codes and everything else going on in the world of all things Eurodollars. But going out 92 days here, that did a whopping 12.9% of the paper. That's how evenly spread out it is here in Eurodollars, listeners. And of that paper, let's see, by the way, if you want a Eurodollar vol out here, is pretty frothy. It's showing me here, the front portion of the curve is showing me at about a 12.5. You're getting farther out down the curve here in Eurodollars. Obviously, they go out for a ways here, listeners. You're talking a 75.5. That seems incredibly volatile. But again, the farther out portion of the curve, you can't say it's not as liquid because they're doing some paper out here this week, including almost 13% of this week's flow going in this one contract, which is about 523,000 contracts. Just in this one SEP contract has 92 days to go. And it's the 98 put leading the dance out here, listeners. Before we get that, let's get to the skew really quickly. Of that rich 75 vol, that's impressive for a rates-based product. 8.1% rich were the puts last week. This week, 9% rich. Last week, the calls, 8.9% cheap. This week, 8% cheap. So a little bit of a equity-type skew here in the farther portion of the Eurodollars as well. Puts are bid, calls are offered. All you folks out there who trade Apple and Tesla and SPY, that should be familiar to you. In terms of the most active contract out here, listeners, again, it's kind of a bit of a scrolling chore when you got to find the most active. It actually, the 98 puts here in this SEP contract did 124,000, but they're actually not the number one contract because the 99 puts in DEES of this year did a whopping 134,000. So they take the number one spot out here, followed hot on its heels by the number two, the 98 put, with 124,000 contract, 98 even, by the way, listeners. Let's just break down some of that paper this week, shall we? Monday, 11,500. Tuesday, a pretty anemic 266. Then it roars back to life on Wednesday with 106,000. That's just on Wednesday. That's just in the 98 put in this one contract of many here in Eurodollars. And that one day, one print, more than all of soybean oil we talked about, more than a lot of the products we're going to talk about here on the show today. 106,000 just in the Wednesday 98 puts out here in September, of a few years out here in the euro dollar. Just crazy town here, listeners. In terms of other action beyond that, the 98 quarter puts 100,000 and 200 out there. Again, the 98 quarter is also doing some paper here on Wednesday. Seems like maybe some verticals or some other spreads were going up because Wednesday was just the most active day across the board for all of them. 86, almost 87,000 of the 98 quarters, and the 97 75s did 68,000 contracts this week. 64,000 coming on Wednesday. So maybe a bit of a funky fly. The numbers don't add up, though, for 1x2. But still, it's interesting verticals perhaps going up there as well. Just a ton of paper out here. What do you think of that idea, Sean? As we have a whole day, we bring on some Eurodollar folks and really just dive deep into this product. This is a product that it's hard to do kind of a cursory glance at. There's just too much paper. I've said it before. It's like spitting into the hurricane. It is completely meaningless and will probably end badly for you. What do you think of that notion of doing one of these days a deep dive into all things Eurodollar, sir? The volume commands that we do it. So absolutely, I think we should definitely have a rates special, and maybe get Aga Misra from CME on the show with us, or Sean Tully. I don't know if Sean Tully ever joined the show. It'd be great to get the interest rate folks on to talk about the Eurodollar complex because it's an amazing, massive liquid machine for the entire industry globally to hedge interest rates. So it's just fantastic. So absolutely, let's definitely focus on rates for a show. When this earlier incarnation of the show, when it was called the long and short of futures options, it was dominated by the ag folks and by the rates folks, and a bunch of others would make routine appearances on the program. These days, Tim McCourt stealing all the thunder here. Sean, he's got crypto and he's got equities, the two hot complexes. Between those two, it's hard for the other products to get a word in edgewise, sir. And then when there is time, Derek sneaks in there and steals the thunder with his C-Vol. Yeah, and Derek's fantastic on the show. He's great to have, but I think there's a little bit of jealousy at Tim over there on the product side. The rates guys are launching some micros, so I think they're kind of asking for a show, don't you? All right, from your lips to the CME's ears here, Mr. Sean. We'll see if we can get something like that together. Because again, this is one of those products that I know for a lot of our listeners to this show. You're new, you're coming into futures options for the first time. You're familiar with equities and things like that. To just dive whole hog into Eurodollars is almost overwhelming. And quite frankly, it's not really a very retail-oriented product. But maybe we could help that a little bit with a special along those lines. Speaking of things that are special, it's your feedback. And you guys have some complexes you want us to talk about as well. So let's get to it. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your segment. I mean, the whole show is your show, but the FX, that's a bit of a spoiler. The Futures Options Feedback segment is where you folks get to take the reins, request your comments, chime in with all sorts of fun nuggets, just like Frankie here did. Frankie said, I was going to ask you guys to review some FX on the show this week. Then I saw this chart and I realized why FX almost never makes it on the show. He sent a link to the JP Morgan Global FX Volatility Index. And it shows here just so obviously there's kind of like a broad, think of it as a broad VIX for the full FX complex listeners. And the title of this graph is Currency Markets Implied Volatility Continues to Drift Lower. And this chart peaked out looks like around a 15. You can probably guess when, the height of the sell-off last year, listeners, in March. it's been trending lower ever since. Got down to pretty low levels, around 7 and change back in last July. Seems to rally a little bit all the way up to about a 10. Again, this is a broad average of their vol across all the major FX products. And then it has trended lower again ever since then. And it's getting back down to, looks like below a 7 now here. So the lowest it's been pretty much since the start of the pandemic here, listeners. So FX vol, kind of anemic. But you know what, Frankie? You asked so nicely. So I'll throw a little FX on for you just because you're that kind of guy out there. And we love all of our listeners out there. So let's go here. Let's just pull a major one here. Let's go to the Euro USD. You guys can find this for yourselves. Go to that drop down. We don't always go to. It says foreign exchange there. And then go to FX majors, Euro USD. Listeners, you guys can follow along. You'll see it does some paper, but nowhere near what we were just talking about. I mean, we just talked about what 100,000+ contracts going up in one day and one option on one strike in Eurodollars. This whole complex has done 37,500 contracts this week. That's a decently active week, but again, it's roughly a third of that one print we just talked about in Eurodollars out there. So bear that in mind. Coming into showtime, the Euro USD at about a 1.2, almost 1.22 here, up an astounding 0.06%. Again, why the vol is kind of anemic. Speaking of anemic vol here, the most active month here is July. It has about 28, almost 29 days to go. The vol out here in July is exactly a 5. It's a 5 even, listeners. That's off about half a point. So it's come in an astounding amount just this week to come all the way down. It was about a 5.5 last week. This week is at a 5. That's a lot of vol to lose when you're already only at 5%. So not a heck of a lot of juice in the FX land. Premium harvesting strategies, maybe not the best choice out here. Of course, you're not getting a lot of juice. The flip side of that, of course, is the juice doesn't have much chance of running you over either. So let's look really quickly to the skew. Last week, the puts 1.6% rich in the July contract. This week, about 2/3 or 3/4 really of a point rich. So coming in a little bit. The calls last week kind of unched to this week. 1.5% bid last week, 1.6% rich this week. And of that, 37,500 contracts went up this week, about 37% going up in July. And the most active contract was the 1.215 puts with about 2,100 contracts this week, listeners. And of that, all of that pretty much today, almost 1,800 of that today. The rest kind of scattered throughout the week. Looks like 1,000 of the 1.205 puts going up, as well as the 1.22, 1.21 puts, and 1.19. So maybe it looks like a funky tree. Again, not lining up exactly for a butterfly, but kind of close. So it could be a bit of a fly as well. Maybe the 1.20 half, 1.21, 1.21 half fly. That could be. It's lining up in strange ways here, listen. But some 1.21 half put paper dominating what little tape there is out here this week in July out here in FX. So there you go, Frankie. Ask nicely and you shall receive, even if there wasn't a heck of a lot to parse, which is why it doesn't usually make it on the show. Spoiler alert. All right. This one's for you here, Sean. This comes from Aaron P. He wants to know, are there any studies about the impact of the Russell Recon on volatility? I know the event itself takes place after the close and only lasts for a fraction of a second. I'm more interested in the days leading into and coming out of it. I would imagine a large change in the constitution of the index would have some effect on volatility. This is a good question. You know, Sean, we always get the questions about, what immediate impact is there on the Russell Recon. And we always say it's pretty nominal by design. It happens after the bell, like he says. It takes place in a fraction of a second. So it's kind of hard for a lot of vol to happen in that scenario. But his question is an interesting one. What about the days leading up to and coming out of Recon, Sean? What do you have to say here for Aaron?
Aaron, great question. And always thank you for writing in, and glad you listened to the show. As I mentioned earlier in the show today, June is historically one of the lowest of vol months historically for the equity index machine here in the United States. And, Russell has done FTSE Russell has done a very, very good job at picking the right time and the right method to reconstitute its indexes. And there's a reason why June is the month. It's that volatility is historically low, one. Two, The methodology used is throughout a month, actually 2 months, because rank day of the index was I think it was May 7th of this year. So initial ranks came out early May. And the methodology is really transparent. Addition and deletions, the first tranche of those were released on June 4th. You can go to FTSERussell.com today and see all kinds of information regarding some of the bigger stocks and the performance of the Russell 3000, which is the combined large cap 1,000 and 2,000. So June 4th was the first day of addition and deletions. Tomorrow's the next round of that. Next Friday is the final round of that prior to recon happening on June 25th. So there's a lot of transparency. There's a lot of sharing of moves within the index, and we're extremely transparent about the methodology that we use in this reconstitution process, so that there aren't those big surprises that create volatility. Again, the market is going to move. There are things that are going to be out of the control of FTSE Russell in this process, and that's the market just moving because of economic events, et cetera. But strategically scheduled, strategically placed, this closing cross that happens at both at our partners NYSE and NASDAQ, the closing cross that actually happens at NASDAQ, really eliminates any market fluctuations, because it is a print, and it happens in, as you very well know, less than a second, and it happens on the bell at the close on Friday, June 25th. So, and again, it's to make this as easy as a transaction for our investors as possible. So that's the methodology. That's why you don't see big fluctuations with the news. We're very transparent over a 2-month period from the beginning of rank day, and then on a weekly basis through the month of June, so that investors, traders, those that need to adjust their portfolios have plenty of time to adjust their portfolios prior to and including recon day at the close on June 25th. So I hope that answers Aaron's question. But, always go to our FTSERussell.com website if you're looking for more information, or reach out to me. I'm happy to talk to you about it as well.
All right, we got time here for one more here on the show. We got a question from regular listener Nichols with a Z. He's asking about futures, but we can indulge him here. He wants to know, how much paper are ETH and the new micro Bitcoin futures doing at CME? I think you meant whispers. Any whispers of options down the road? Well, the latter, I kind of talked about this last week and then earlier this week on our crypto rundown program. I think we're going to see options for these sooner, obviously, than we saw them for the big Bitcoin futures, which was a little over 3 years. I would say within a year, I think, is a reasonable time frame. They launched these, obviously, with the intention of putting options on. They have to just build up the futures volume a little bit. And that's kind of what they're doing right now. Let's start with ETH. The ETH contract, by the way, if you haven't paid attention in a while, ETH's about 50 Ether. So it's still a pretty beefy contract. I mean, ETH is around, I think, $2,500 right now. So you're talking about $125,000 for that contract size. So it's still, the ETH contract is not exactly, retail sized yet, but they're still doing pretty decent paper. They did about 12,000. That was the most active day. That was on the 19th. That was a big day in the sell-off world for crypto, obviously, listeners. The most other days are out there between 5,000 and 10,000. And this past week, again, listen to the crypto rundown, it's kind of been quiet. So not much going up this week. They had a couple days around 2,000 volume this week. And the OI is around 3,700 out there. So it's getting there, but it's got a ways to go yet. I think micro Bitcoin, is where more people are fixated and focused right now. This is the one that was obviously designed for the audience of this program, the active retail customer who's hitting up CME all the time saying, I'd love to trade your big Bitcoin futures, but they're too freaking big. They're 5x of a coin that has been cut in half. So it's a lot cheaper. It's around 30,000 now, as opposed to cheaper than 60,000, but still 5 of a 30,000 contract. You're still talking $1.50. So you're still talking a pretty hefty, beefy contract. The micros, they went small with these. These are 1/10 of a Bitcoin. So it's 1/10 of a Bitcoin, and it's 1/50th the size of the previous future. So that makes it a lot more bite-sized, a lot more palatable and manageable for a lot of our listeners out there. These are doing some more paper. The OI is about 20,600 right now. Again, divide that by 10 to get a 1 Bitcoin, and then by 50 to get the size of the previous futures. But still, it's doing some paper. The most active day, same day, the May 19th. That was, again, a big sell-off day in the crypto world. About almost 100,000 contracts on the tape that day, about 95,000 out there. So you're still talking, roughly 2,000 of the big futures out there. So some paper in these micros. Most of the other days we've seen somewhere between about 22,000, about 37,000. They hit a couple hit 50,000 a couple of times out there as well. And again, this past week's kind of been quiet on the crypto front. So only about some days around 12,000 this week. So the micros are starting to catch on. And I think if we see more of those papers, some more of those days around the 50,000, getting up to 100,000 out there, I think we'll see the options coming along there. So I think they still need a micro in ETH before they really kind of take off there. But the micro Bitcoin, for all of you out there who want to trade Bitcoin options on an exchange that you've actually heard of, that is actually regulated and listed here in the U.S., they exist. I can attest to it. They're right across the river here from our studio right now. I could see them if I looked out the window. So CME exists. They're there. You can trade them. It's just a question of when we get the options. Every time Tim McCourt's on, I bug him about this. So I am your advocate on this issue here. Who wrote this question in? Nichols and everyone else who's asked this question a million times. I do think they launched these micro Bitcoin futures with an eye toward the options. I think within a year is a reasonable time frame for options on those. Hopefully even sooner, maybe by the end of the year, but let's not get ahead of ourselves. I think within a year, I think we'll see these micro Bitcoin options at the very least. All right. Unfortunately, that music means we've come to the end of another epic sojourn through the world of TWIFO. Sean, we touched on a lot of fun things today. We got out into the land of ag, so all of our ag heads out there who've been hitting us up, you got a double dose of ags on the show today, so hopefully you enjoyed that. You got a little taste of all things equities. We went out to rates. We even hung out in crypto, all over the place this week. I forgot about FX. We even touched on FX this week. So if you're like Frankie or all these others here, Nichols, you have a product you want us to talk about on the show coming up or a question, hit us up. You know where to find us. Our members out there, the ones who listen live, who can get in there, they have their special secret access code. They can get bumped to the top of the line for all those questions. So keep those questions coming for you folks as well. And before we go, Mr. Sean, obviously hot and heavy days for you guys over there in the land of FTSE Russell. And before, I didn't even give you a chance to chime in on, I was so excited by the questions. I didn't give you a chance to chime in on Nichols or Frankie's questions. If you have any comments on those, have at it. And then B, if folks want to learn more about all things FTSE Russell and derivatives, where should they go? What should they do?
Mark, thanks. And it's just been a fantastic show today. Just great subjects, great topics. The equity discussion, is near and dear to my heart. Boy, I think we need to get into a rate special, as we said. But I want to get back to Aaron's comment about volatility again in the Russell complex. One of the things people are concerned about is recon and what to do around recon. And is there a way that you can stay in the market and have your investments without having to disrupt your portfolio? And there's a way to do that with derivatives. And there is a webinar tomorrow on mitigating risk around recon with derivatives. So I wanted to just highlight that to Aaron. He can go to FTSERussell.com to register for the webinar. CME and Cboe Global are both presenting. It's going to be a fantastic show. We've got Catherine Yoshimoto and Mark Barnes from FTSE Russell on. There's Kevin Davitt from the Cboe, who is just a fantastic speaker, along with Gio Vicioso from CME Group. And it's going to be a great webinar tomorrow. So go to FTSERussell.com. And Mark, I'll blast these to you so you can send them out to all the listeners of the show. But again, back to recon, there's a really good press release that came out last Friday in regards to the Russell recon. I'll send that to you along with this link, Mark, so you can blast it out to your listeners on some really good information about the addition and deletions and market performance of the U.S. indexes this last quarter of last year and going into recon this year. So I just wanted to add that to Aaron's question, that there's a great webinar tomorrow that I think all the listeners would really, really appreciate in regards to trading options around recon, trading futures around recon. with both SIBO and CME. So, and again, I'm Sean.Smith at lseg.com if you need me. But you can always reach me through Mark on the show. I'm happy to answer your questions. Keep them coming. It's been a great show. Thanks, Mark.
It was a great show indeed. So you know to go, listeners, to check out that great webinar on all things Russell and derivatives. We'll tweet it out for you if you want as well. Going on tomorrow, so stay tuned for that. Speaking of tomorrow, this does conclude our live broadcast schedule for today. If you're listening live, maybe we'll put some fun extra credit in there a little bit later. Maybe some shows you missed, getting a little bit of a rebroadcast there. Well, we are back again tomorrow. Live, noon Central, 1 p.m. Eastern for Volatility Views. Going to be a good one there. Got some great returning guests to join me there. Then we're back again for all of our pro members. Speaking of pro members, I see new folks joining up on the pro side during the show here. So welcome to all of you folks who are joining us. It's a fun adventure. We're all kind of kicking it off here together. I'm excited and glad to see so many of you are excited and joining us as well. All you pro folks get to join us after Volatility Views. The Rock Lobster joining me on that show. He politely requested that we do it immediately after Volatility Views. So we're going to move it up from 2 till 1 p.m. Central. So you get a back-to-back double dose, all of our pro folks out there. You get Volatility Views at noon Central, and 1 p.m. right after that, the return of Options Oddities, breaking down all the crazy, weird, unusual paper. And there's a lot of it out there, your AMCs, your Clovers, you name it. A lot of fun stuff to break down. So if you're listening to us, you're a pro member, you get all of that too. Of course, if you're pro, you get access to that podcast feed as well after the fact, so you can listen to it all at your leisure and a whole bunch more. And of course, you know where to go to check out the data from this show. Those reports are available all week long. You want to check fluid milk at 2 a.m. on Saturday? You can do it. We won't judge you. CMEgroup.com/TWIFO is the place to go to get all those reports and a whole bunch more. On behalf of everybody over there in CME land and Sean and everybody holding down the court there in FTSE Russell Studios, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. For all the new folks who just joined us today, welcome to all of you. And we'll see you back here live again tomorrow, noon Central, for Volatility Views. And then it all kicks off again next week, all the way through to next Thursday, and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options,
facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.